My name is Tim. I go by Autumn. This is your Week in Confluence, Episode 7, Putting It All Together. So putting it all together from this session, Wednesday, August 19th. I always struggle with what exactly to say after trading a session like this one, where everything seems so orderly and structural and even predictable, as you'll see. Just a very rewarding experience to come into a day where the language that the market is speaking seems to be a language you are very familiar with and are quite fluent in, and just a very rewarding, both in terms of being lucrative, but also just methodologically and occupationally, very rewarding and fun, as I'll try to show here. So I'm going to play a few clips from our pre-market prep, so our little committed team's pre-market mapping of things, driven by my mentor, recorded by my mentor this morning at this would have been 7 Central, so an hour and a half before the open at 9:30 Eastern. And while there is a certain level of rigor and scientificness to this approach, things are very probability driven and data driven. It is not rocket science. It is by no means difficult to understand. It takes a little bit of extra care and deliberate effort than maybe most people these days associate with trading. Good luck to you. But it is not a particularly difficult thing to map what we call path and destination. So destination being these clear and definitive levels that are mapped in advance each and every day for us by design. Never curve fit. They're there whether they work or not. And then path being just how we get there. So things like average daily range or symmetries like an AB equals CD, which another person would call a measured move into a level or not into a level. Path and destination. So the levels that we value as good levels to do business versus levels to avoid doing it. And then the path, or how we get there, and then in between those in those levels. So I'll play a few clips, just a few minutes of clips here from our pre-market prep, and we can watch how it all unfolded.
Good morning, guys. It is Wednesday, August 19th, and this is your futures market. Obviously, overnight to the tick so far, we're at WR1 and all-time highs on the September contract. We have not hit trend guide reversal, so these will not fall in the normal ADRs, but obviously this is still going to be big for today. We're still looking at this as a level of the all-time high. We could see, maybe a drive down, fill the gap, then push back up and give a divergence look at trend guide reversal or QR1. To the downside, look at down to trend guide 22. Let's just move this in because we got plenty more room now. So 22 to trend guide. Let's see what else we have down below. WPP. So this is your normal. This will be our outside, or normal outside ADR, or just normal ADR. Right in between 37.42, 34.42. Because it's been quiet and we're getting some of these days, I think you have to look at something like this again. So we're going to be looking at down to that low yesterday, that low. So let's look at that. So that goes from 22. We had yesterday was 25. And then obviously if you draw it from to those lows yesterday, 28. So you have to be looking at that. for ADR potential there. Now up here, that level. So if you look at this, we're in a rising wedge right now. Rising wedge, we're touching the top of that at all-time highs. We have a VWAP that we came down and hit overnight. That falls right in here. So we'll keep monitoring that AVWAP. We're going to see a liquidation soon because they're not going to make this too easy. Still think that we're got to watch. I mean, Apple's the key here. Not a whole lot else to look at. Apple is driving this market, and the split is on Friday. Now we have this other one down here, a bigger one with Confluence, that swing low. There's just no question about that's the swing low right there. MR1 and a supply and demand zone, that's right here. That's going to be probably our first. We'll just do the lower end of that. So 194, so that's definitely our first bigger outside ADR.
The prep and the NASDAQ futures and the Russell futures were basically equally as stunning. So on my screen here, you have the ES, the E-mini S&P futures, the NQ, which are the NASDAQ futures, the tech futures, and then RTY, which is the Russell 2000 futures instrument. And so I've left all of the key zones from today, August 19th's prep, on the screen. You'll notice the same zones from the pre-market prep video there, QR1, weekly R1 at the top of supply and demand, the level that held perfectly at the lows here, gap fill in the upper end of supply and demand. The only difference between the left hand side of the screen and the right hand side of the screen, the left hand side of the screen are the regular trading hours charts of these three instruments, the ES, the NQ, and the RTY, and the right hand part of the screen are the extended trading hours. So the all hours, or the Globex, as some people call them, hours of these instruments. So Asia and Europe sessions included. So each row of these charts should be treated as one instrument. So ES, RTH, and ETH, NQ, regular trading hours and extended trading hours, and then the Russell the same. So a lot of these levels, like one we won't talk about just because of scope, is the Russell at highs. This was the main definitive pre-market prep zone for a short in the RTY. Gap fill at the upper end of the zone, MR2, and then supply and demand at the lower end of the zone with the days R1 and weekly pivot point. So it's just not within the scope of this to get into that, but that zone is from 4:30 or 5 a.m. my time this morning. So the point there being, not to gloat, but just to say that there's a ton more in play here. All these drawings are the exact drawings that we made in real time without the benefit of hindsight. And another further thing to point out here is, so for example, you'll remember from the clips, the main thesis on the NASDAQ on the downside was this MR1, supply and demand, and anchored VWAP, which we obviously didn't get there in real-time trading hours. In fact, we were a good 40 points off. But if you look, as of recording this video, evening time on the 19th, the same day, we got there, and after hours we shed another 40 plus points or 50 plus points in the extended trading hour session. This is an hour after the Asia Open, and we got to that main zone from prep, which you can see here from this box was the main zone that was next after the zone that held perfectly right here soon after the RTH Open on a Confluence long signal. And same with the RTY, the main zone. I don't think I included a clip, but the main zone from the pre-market prep for the RTY, the Russell futures, was this annual pivot point and weekly S1 here. And we didn't really even get close. We're 10 points away, almost exactly 10 points away during the regular trading hour session. But as I record this video, we not only got there, but we're trading 6 or so points, 5 or 6 points below into the next supply and demand, which is also obviously the prior structure from this breakout. It's basically a breakout retest of this very brief early August consolidation, which was also included in that pre-market prep discussion. So the point there is a ton more in play here. All these drawings are exact drawings from the pre-market. It's a little bit outside of the scope for this particular putting it all together discussion to discuss every single one of these. But we did indeed get the early morning Confluence long that we'd mapped out with ES, gap fill, supply and demand, NQ just above the anchored view up at the weekly R1. RTY, really nothing there. Gap filled, relative strength higher low in the anchored view up. We'll get into that in a second. And then the perfect levels at the highs. NQ didn't get into its upper level. Weekly R2 at the highs, but it did get a massive signal in Apple, which obviously is a huge part of both the S&P and the NASDAQ. And it was a very, very perfect regular trading hours trend line, up trend line. I didn't expect to work as well as it did. It worked very, very well. So I'm going to keep this, try and keep this as brief and sleek as possible, because there's so much density to the amount of information in play for some of this stuff. It's a continually curious discovery process just to dig into how much goes into every Confluence signal. And most of that's characterized by mistakes. It's not characterized by, oh, I'm the oracle of all these plays. It's, I saw 6 things and there were 42, or I saw 10 things and there were 20, whatever it is. So it's a continual process of both self-discovery and discovery of the auction. And so that's why we go into some of these things in this manner. But again, we got our perfect upside targets and got the exact targets that we wanted on the downside. None of the stretch targets hit in the regular trading hour session, but as I just showed on ES, NQ, and RTY. Oh, I can show on ES as well. I didn't go over that one. So you'll remember from the clips I just played that obviously our first target zone on the downside was this supply and demand. It was described as we thought of it as a trend line, but that's path. Things play out differently in real time. So this supply and demand level with this anchored view up here, that was kind of the near term, well within ADR target. The stretch target that was described in the clips I just played was this supply and demand level. Notice that's 20 points. This supply and demand level 72 is in the middle. This supply and demand 52 is at the bottom. So this is 20 points lower for someone that held that short into the Asia Open. But again, going over to this chart, that's mapped pre-market. This box, this rectangular box here, is mapped pre-market this morning at 4:35, 5:30 a.m. Pacific. So an hour, 2 hours, an hour and a half, an hour before the open. So did we get there in the RTH session? You can see clearly, no, we didn't get here. But as of the Asia Open an hour and a half ago, a couple hours ago, we got there and even traded 4 points below it. So we'll see what happens from there. So first things first, 7:30 my time, so 10 or 10:30 Eastern, we come into that very shallow but very expected zone from the pre-market prep videos I played. This was ES, the exact zone that it's almost to the tick, the shallowest or the narrowest zone that was highlighted in the preparation. Upper end of supply and demand and gap fill, which you'll remember Dave, my mentor, talking about in the pre-market prep video, was this anchored VWAP here. And we were expecting that to join the upper end of that supply and demand zone. And that's where I talk about This process being certainly rigorous and scientific, but it's not rocket science just to map the 3 or 4 tools that we use because we know the market cares about them so much, and just to be able to plot, okay, the value of that might be between 85 and 87 at that time. And then for it to play out, it's literally to the tick. I don't know how much you care that I zoom in, but it's literally to the tick there. So 3 hours after the pre-market preparation is done for our little team, ES comes into the prior session's gap fill, so the prior session's untested close, and then the upper end of a very significant supply and demand level, and then this anchored VWAP that we were talking about pre-market to the tick. Obviously, same moment in time, so 7-ish Pacific, 10, not ish, 7 Pacific, 10 Eastern, and Q comes into its massive weekly R1, which has been which is an important pivot point, just above its swing anchored VWAP, gap anchored VWAP, which was so important in the prior day's low with MR1, monthly R1, and supply and demand. And RTY had relative strength, so at the same moment in time, it was actually up into its mapped level from pre-market, one of its mapped levels, just shy of its mapped level, weekly pivot point, daily R1, and the anchored VWAP from the high, swing high. And it came back down and held intraday pivot point and the anchored VWAP from the swing low. So if I scroll back to that swing low. So that's that same moment in time. ES and NQ come into very significant levels, planned pre-market, and rage up. RTY is relative strength. It pulls back a little bit and then plays catch up into that significant level that I started off this little discussion talking about right there. Gap fill from, it's not the prior day session, but it's the second to last session. So the 17th of August, and it's a really sneaky gap fill. You can't really see it visually, but the open was lower and it never went higher than the open on the 18th. So that's a sneaky gap fill right at the monthly R2 at the highs in RTY. So ES comes down, exact zone highlighted in prep, upper end of supply and demand, prior day's gap fill, NQ, big level. RTY was making a higher low at surf and intraday pivot point and anchor VWAP. What else was there? Same moment in time. Many things. As I said earlier, I struggle trying to communicate the density of information in a video like this because I don't want to sound long-winded, but Microsoft, same moment in time. Dick for ticked its anchored VWAP. Amazon did not dick for tick its swing anchored VWAP. From here, I guess it did technically dick for tick it. It's 50 cents away in a $3,260 stock. I'm going to call that to the tick. Basically a to the tick hit in Amazon. You had this across the board. This was just a big Confluence long and a lot of things. I tweeted at this time that it was a Confluence long in the industrial stocks, which I'll show in a second. Shopify came into a huge level with the 20 daily exponential moving average, monthly pivot point, weekly pivot point, and daily S1. So 4 significant pieces of evidence in a 4-point zone, all holding. Facebook was right above AR2. I'll show the industrial long that I don't really trade these, but I just always see just like energy. They're not a huge trader of mine, but I just see the cleanest signal. So same thing, August 19th, same moment in time, going into the 7 a.m. Pacific, 10 a.m. Eastern hour, MR1 20 EMA in RTX, a leading industrial stock, weekly S1 in Boeing, leading industrial stock, and XLI was at a level, let me try to find this on my screens. XLI, same moment in time, 10 minutes before was MR2. So you had some different sector longs, some financials as well were at levels. So again, ES level from pre-market prep and Q level from pre-market prep, RTY a higher low with 3 pieces of evidence. Tech, Amazon, Shop, Facebook, XBI, which is a biotech index that trades with RTY a lot, was holding a big level here. Same moment in time at 7:30 Pacific, monthly pivot point and 20 EMA. Notice the MDY, which is the mid cap index, and kind of helps this breadth of both the S&P and the small cap index, was weekly S1, both at the open and then at that same moment in time. And then even inverse correlated things. So bonds and volatility, bonds and the VIX would obviously be inverse correlation to equities, but they can participate in a confluence signal because they can be at a buy signal when indices are at a short signal, and they alternatively they can be at a short signal if the indices are at some screaming confluence buy signal. So at that same moment in time, 7 to 7:30 Pacific, 10 to 10:30 Eastern, you had all those things I just showed in indices, and then you also had two inversely correlated instruments, namely volatility, holding weekly S1 from below, and bonds throughout that whole process, both shortly after open and then again at 10:30 Eastern, holding a very significant weekly pivot point. This was also a huge level in ZB, which is the 30-year futures, 30-year bond futures product, which I won't go into, but multiple bond instruments with an inverse correlation to indices at significant levels before the fade in them, which would have led to the rally in risk, rally in indices. And that rally went into the key levels from prep, which is the next thing we're going to talk about. Same moment in time, we come into this huge confluence signal, a lot of which has been mapped in advance just because we have this definitive real-time edge with key levels and path that we can map in advance on how we get there. Some of which, though, is path dependent because that's how price action works. We don't know how things are going to work out. We don't know what the market's going to do, and we don't know how things are going to get to where we think that they'll get to. But for the most part, between 11:45 Eastern, 8:45 my time, and noon Eastern, 9 my time, so many things got into key levels. This is really such a significant level, huge level, and Q getting to this regular trading hours trend line, ES coming up to the exact level we had mapped pre-market. Again, remember as you're watching this discussion that these drawing tools are all from pre-market. They've not been tacked on. That's showed in the clips I showed. So for example, RTY, this gray box was drawn at 4 a.m. or 5 a.m. my time, an hour and a half before the market opened. And this box obviously was including MR2, gap fill, a naked VPOC. Doesn't really matter. Daily R1 here, 1582-ish. Weekly pivot point, supply and demand, a wider zone, but we're always looking for confluence when we have a wider zone like that. And Q, we had levels above. Weekly R2 obviously was, it's hard to map levels above in an instrument that makes all-time highs all the time, every time you take a nap. But that was a definitive level, just never got there. We didn't even get to trend guide reversal. We did get to this regular trading hours session trend line. A big part of that is Apple. So RTY key level, NQ kind of out in space other than that trend line. ES exactly the level we planned pre-market. We gave room to QR1, which I'll show in an execution chart later. But a huge part of the clue was Apple. You'll remember from the clips I showed at the beginning of these of this particular discussion that Apple is driving so much of this market with underlying sectors deteriorating and looking nothing like leading tech stocks, especially with the split coming in Apple and to a lesser extent Tesla. At the same moment in time, Apple had this ABCD, and I'll just draw it again so it's more authentic and not just some lines on my chart. So if you go to that low and that high, and then these swing lows, which are basically to the tick double bottom. And then we'll just draw a horizontal line from the top of that ABCD term. So you didn't really get any 5-minute bars that closed above that. We got a little exploration liquidity move up there, 40 ticks in Apple, but for the most part, Apple stopped right at ABCD at that same moment in time, 11 Eastern in this case, but then going into the 11:30 and noon Eastern time frame, holding surf, holding surf before giving it all back. So huge moment in time at the highs, and hopefully we can build validity in some of the stuff, and so it's not hindsight BS in showing the clips from pre-market. There was also so much going on at this same moment in time. Google up here, same moment in time, 11 noon, 1 Eastern, QR1, quarterly R1, daily R1, weekly R2. What else was there? Even something like Shopify had this swing anchored VWAP, which has been so important. Got above it on the spike at open into weekly R1, and then just holding, stalling below on that same Confluence sell moment in time. Even something like Amazon didn't quite get up to AR5, but in the same window of time, consolidating below AR5. So much going on there. We just sort of consolidate there in a lot of things. ES even sort of retest, E-mini SP futures even sort of retest up into weekly R1 at the top of supply and demand level. This is also ticks away from all-time highs in the regular trading hour session. RTY consolidates, holds the, even something like the VIX, as everything consolidated, made a lower low during that time frame. You can see the 11:30 to noon time frame. Nothing much going on, no levels, nothing, no pivot points, nothing. And so as things kind of consolidated and Apple fell apart, which is carrying the market over the last few weeks, VIX comes down into its daily S1, so what we'd call trend guide reversal. And it holds, I mean, that is, never closes below it on a 5-minute basis. It just needs to tag that. That's Confluence. That's the power of Confluence. It just needs to tag it, and it rips up. So TLT, very similar. So anyway, this first move down from these levels that were mapped pre-market is very swift. This is a 15-point move in ES. It's a 100-point move in NQ. RTY has relative strength for a while. It gives it all up later. But a massive move for chunks in any of the stocks that we've been talking about. Any futures product, if you're making 20 points on a trade like that, 15 points on a trade like that, is a great payday. I don't care who you ask. The front day expiring crack put goes 10x. This is today's 33.85 put in the ES. The SPX put would look the same. SPY put would look the same. 80 cents to $9 or $8 to 10x. So we move down, and there's one more thing I want you to pay attention to, which is this massive continuation signal we got. And we call it a continuation. We say cont or momentum continuation signal because it's in the direction of trend. It's inside the day's established range. It's not a premium outside level like we saw at highs, catching all these market participants unprepared that aren't looking at MR2 or gap fill, or so they don't know what supply and demand levels are. They don't know. They don't have the scientific approach to draw these trend lines. They don't have weekly R1. They don't have supply and demand. They don't know that the all-time high non-back adjusted in ES is up here, right? So that's a fresh premium outside level. But you also have an inside level like this. We call this continuation. So ES coming up into surf, which is the black line, thin black line, and then the supply and demand level, which is the shaded area. And Q coming into surf, and RTY coming into weekly pivot point. Excuse me, that's a different moment in time. RTY coming into weekly pivot point, daily R1, and the supply and demand. And you'll notice that this continuation short at the same moment in time was intraday anchored VWAP pretty much to the tick in all three of the index instruments. So if I just draw an anchored VWAP from the 5-minute bar at the highs of the intraday session, that anchored VWAP joined surf, the prior gap fill, and the supply and demand zone from below, adding another piece of evidence to that continuation or momentum short. Similarly, in Q, if I just draw an intraday anchored VWAP from the 5-minute bar at the highs, that joined surf and a lot of real breadth stocks in tech in the NASDAQ at levels at the same moment in time. Same thing in RTY, the Russell. If I just draw an anchored view up there from the highs, you can see all the seller emergence, all the selling pressure wicks as RTY came up to test supply and demand, daily R1, weekly pivot point from below. Intraday anchored VWAP added another piece of evidence there to predict supply or to take some risk on the short side. So really a set of intraday anchored VWAPs from the highs there, adding one more piece of evidence to that really, really nice Confluence continuation short. At the same moment in time, this moment in time, by the way, is 12 my time, 3 Eastern. Basically every tech stock was coming into that same level at that same time. 12 my time, 3 Eastern. Amazon, Google, Microsoft. These are the 4 horsemen of the market. These are the most important. Apple, such a critical level at highs, such a nothing at lows, really gap fill, right? Gap fill at lows. But a critical part of the market comes up into surf, can't get above it. Same moment in time, let's just look at any other tech stock. Same moment in time. Oops. $12 my time, 3 Eastern. Nope. Surf. Tesla. Fails surf. Facebook fails surf. And this massive pivot cluster that's been so instrumental fails all these pivots and surf. Same with Netflix. So really, really massive continuation signal. Again, it's not to condescend the idea of a continuation signal of a retracement trade. It's just that it's a different breed. It's a different hybrid of trade. It's in the direction or carrying on with a bigger move that's already been made. It's just importantly a distinct category of trades. Apple, Microsoft, Facebook, Tesla, Shopify, everything at surf. ES at supply and demand, surf, and Q at surf, RTY at massive level surf. Notably, the crack put just a strike away, the 80, when we were looking at the 85 earlier, in the price range we liked it. At the same moment in time, noon, 3 Eastern, that went from 1 to 15, so a 15x, again, that's a 10x on the first signal, premium outside levels, and then a 15x on the second signal. So let's say you even take 5x out of each of those, that's 1K to 25K, however you want to play that. So we get another huge move. The first trade was 15 points in ES. The second trade is 20 points in ES, almost exactly, 86 to 26, 10 to 15x on that move. And at the end of all of that, after all of those opportunities, it's a month or even a quarter making day. Look here at the average daily range. And you'll notice that today, August 19th, the total regular trading hours range for the ES was 30 points and a quarter, 30 quarter. And it's kind of hard to see because I have the title of my charts up there, but the 20-day average of every session in the regular trading hours for the last 20 days is 30 points and 25 cents. It's 30 points and a quarter. So after all of that, after a Confluence ballet played out across the board, level to level to level to level, including so much of it being visible from in advance, we just settle up at the exact, not a point away, not 10 points away, not a tick away. Today's range, August 19th, was 30 points and a quarter. The 20-day ADR is 30 points and a quarter. So we just fill that perfectly. Nothing exotic happened to the upside or the downside today. It was perfectly normal, consummately normal. And as I mentioned earlier, after hours in the Asia Open, we hit so many of these extended levels. ES hits this weekly pivot point in supply and demand that was the stretch target from pre-market, which you can see here on the chart. This box was drawn at 4 a.m., right? NQ. After the market, 2 hours ago, hits MR1 supply and demand. This box, this gray box, was drawn 12 hours ago. No, more than 12 hours ago. Was drawn pre-market before the session even started. That. Same with RTY. Annual pivot point, weekly S1. Where are we? Hit it a little bit below. It's hard to put in words, man. What an incredibly gorgeous session.